Okay, how's everybody doing this evening? Yes, my name is Kent. The channel is Bitcoin Believer, Artificial Intelligence, and yes, we are still here after the hurricane went through, actually the tropical storm. So everything is pretty much just the way it was the last time I shot a video here. Nothing got washed away, and we didn't get lost in the storm. So tropical storms in Southern California they just don't carry the weight that they do on the East Coast and in Texas, because storm blew through here. And actually, I would think that I know that people may have lost some property or damaged some buildings or something like that, but by and large, the moisture was probably a good thing for a lot of people too. So anyway, I want to talk tonight about the elephant in the room. And the elephant in the room is a company by the name of an investment firm called BlackRock. I heard the other day on somebody's video, I think it was Joe Rogan or even somebody he was interviewing, where the guy said that BlackRock controls about 70 or actually 85% of the S&P 500. That's a massive amount of equity. S&P 500, Standard & Poor's companies, and they control about 80% of that. So that is really the elephant in the room. So when you think that we have, a president of the United States, we have a Congress, we have a Federal Reserve, and then you got one entity basically owning about 80% of the stock market, 85% of the stock market. Who really is in control? Is it our politicians or is it BlackRock? And there's a pretty good case to be made that it's probably BlackRock, especially as far as the Federal Reserve is concerned. So when BlackRock controls so much, I think $10 trillion in equity under their control, under their investment firm, their investment. Larry Fink, he's the CEO of this. I talked about him the other night. When they control $11 trillion, $10 trillion and all this massive, massive investment, they have a lot of influence on people's decisions, on companies. I mean, they can literally go to a company and remove the board. If you don't follow the policies they like, if you don't follow the environmental policies that BlackRock wants you to follow, they could remove your score as far as how they rank you, if you're able to get money, credit, or whatever. All these things is controlled by basically one entity called BlackRock. So the reason I'm talking about BlackRock, because BlackRock has shown a huge interest in Bitcoin. Larry Fink's been talking about, first, they didn't want to talk about Bitcoin. Got the lowriders out tonight. We got a train coming through. I'm just gonna have to talk through the train. That was the one good thing about the storm. For the night that when we did the storm, I didn't have any trains go through because they shut down the track that night. So yeah, that's a good thing. And one good thing about the storm, outside of the fact that we brought some good moisture here to Southern California. So I'm gonna talk through it. I have to deal with this every night. And I've complained about this before, but these guys, now you're listening to this video live. I'm not editing this video. Did he pull the horn like 25, 30 times? I mean, once would have been sufficient. If you pulled that horn one time, everyone for the next mile and a half is going to hear it. You don't have to blow it 20 times. I mean, it's like, we've got technology, we've got internet, we've got artificial intelligence, but we still have this antiquated, big old piece of iron rolling down a track, at God only knows what speed sometimes, and a guy blowing his horn all the way through all this heavily congested area here in Southern California. So enough of the rant. I know I make that rant all the time, but let me tell you, when you're sitting here a block from the beach, some of the most prized real estate in the world, and you got this train running through here 10 times a day, 15 times a day, 2 o'clock in the morning, 3 o'clock in the morning, you kind of wonder, who's in control. So we know who's in control. It's called BlackRock. So anyway, back to the BlackRock BlackRock part of this video. So Larry Fink, I always want to call him Larry Fink, I don't know why. Larry Fink is showing a huge interest in Bitcoin. And of course, what they're proposing is an ETF. What an ETF is a way to invest in Bitcoin without actually holding the Bitcoin. You can invest through an investment fund, or through an investment. They can have custody of your Bitcoin. So when you buy your Bitcoin, you don't have to have the custody in your own wallet, or you don't have to control it, or you don't have to take care of your private keys. A lot of things that keep people from buying Bitcoin because they're worried about it. It's not like, hey, if I lose my money in the bank, at least I know I got a little bit of FDIC insurance. I lose my money in Bitcoin because somebody hacked my wallet, then I could be out everything. So that really is a big hurdle, a big friction point for a lot of people to own Bitcoin. And of course, everybody knows, when you lose it, when a transaction gets done on Bitcoin, you can't undo it. You can't go, oh, hey, that was a bad deal there. I want to get my money back, and the guy who stole it is a crook and he's a criminal and they arrested him. Now where's my money? So you found out with this guy, the guy with the big fro, I always forget his name. FTX. I mean, it sounds like they're not even going to do anything to that guy now. From what I heard, maybe they'll recharge him. I don't know. But anyway, I think that was just a way to try to bring Bitcoin. Maybe when that didn't work out, the FTX thing didn't work out. Now they're going to try to do an ETF. So Larry Fink they've applied for an ETF. Sounds like they're going to possibly have one next year, 2024. And this is the main issue that concerns me. Is if BlackRock, with 80% of the S&P 500 under their control, massive influence with the federal and trade, the Federal Reserve, massive control of the Federal Reserve, massive control over politicians, massive control over Fed chairman, massive control over everybody. What are their intentions with Bitcoin? I mean, obviously, if they take a big stake in Bitcoin, it's going to be good for them, but when you're running fiat currencies, you can do whatever you want to do. You just print as much currency as you want. But with Bitcoin, it's limited. It's limited, and it's limited to how much can be mined. And the other thing that they're going to have a problem with Bitcoin is they're going to have a problem with the energy. I mean, that's why Elon Musk jumped out of it, because he all of a sudden got an environmental interest that their mining was costing too much energy. So they decided, hey, we don't need to spend all this energy mining Bitcoin and making global warming worse, so why don't we just go ahead and I'm not going to buy more Bitcoin and whatever. So for that nice little brief run where we had a good run from like 5,000 to 60,000, because Elon Musk started buying it along with a few other people, Saylor and a few other people. But then Musk decided, no, I'm not going to take Bitcoin in payment for my cars because it's consuming energy and that's not good for the environment. So maybe Larry Fink gets a hold of Bitcoin and decides that, hey, it's not working because of environmental issues with Bitcoin. Like I say, they have so much power and influence that they can literally tell companies how to run their business. So will they alter the way Bitcoin is run? Meaning they do something like take Bitcoin and possibly turn part of Bitcoin or turn fork Bitcoin into a proof of work instead of a proof of stake instead of a proof of work. Could they do that? I mean, we don't know. I mean, this could be one of the things they do. I think they said that in the ETF, they had to do some filings, and some of the filings that they did was that they could maybe change some of the way Bitcoin's run. And of course, Bitcoin is very, very, it's held by people that really are very, they're very concerned, very intent on making sure the Bitcoin protocol stays true. So when a guy like Larry Fink comes in, buys up 30% of the outstanding Bitcoin and decides to fork it because of the energy environmental issues and decides to make it into a proof of stake concept, and they do that, how does that affect Bitcoin? Well, who knows? I mean, I always think Bitcoin's going to be something of interest, value, even if they fork it. I mean, you'll have two Bitcoins. You'll have the proof of work and you'll have the proof of stake. I'm not of the opinion that if you have the proof of stake that the proof of work is going to go to hell. I think the proof of work would still be valuable, simply because of the fact that it is something that can't be, the supply can't be changed. It's 21 million and it can't be changed. I mean, if you fork it and make it into a proof of work or proof of stake, and you start altering the supply, well, now it's no longer Bitcoin. It's only Bitcoin in name. It's not Bitcoin in true value and what it represents. So in that respect, I don't think there's any way that they can take Bitcoin and make Bitcoin into proof of stake and just forget about the 21 million and the halving and all this other stuff. But the thing that I would say to you, and this is the positive thing about what I'm saying tonight, is that, and I've been saying this for a while, that we have a halving coming up next year, early next year. And of course, everybody knows what happens. Every 4 years, Bitcoin miners' rewards are cut in half, which is actually kind of a way of keeping Bitcoin true by making it so there isn't an inflated amount of Bitcoin. So it makes it so that, you know, it's not like the US dollar where they just print it out like, you know, it's just printed off like toilet paper. I mean, just there we go. Here's another roll of U.S. dollars going out. Another $1 trillion spent because we got to help Ukraine. Another $1 trillion spent because we got to do this. And there could be a lot more spent here in the near future with things going on the way they are. So there could be 2 Bitcoins in the future after this ETF. But until we get to the halving, there's nothing going to happen with Bitcoin except for the fact that it's going to become more valuable. Because of the fact you're going to have a halving coming up, which means the rewards are cutting in half, which means supply will be less, the miners will be making less. So in order for them to continue to mine, the price has to go higher. So you can bet, and this has happened every time we've had a halving with Bitcoin, you can bet that the price goes higher. So I would say, in my humble opinion, in my opinion alone, nobody else's, and that Bitcoin has a very good chance of doing well for the next few months. In fact, until probably the early part of next year. So if there's a play out there right now, if you're just the person looking to make a little bit of money, play on something that could possibly turn into something really, really good for you, I would say buying Bitcoin right now at this price, especially when it goes down. I mean, I thought it would go a little bit lower. It's coming back a little bit. It's back over 26. It's down to 25s. I was expecting it to go into the high teens. And the reason I was thinking it was going to go into the high teens is because, you know, BlackRock is going to start acquiring positions. They're going to want to do that. But I guess the reason the Bitcoin went down is because Binance was selling it because they were trying to support their own token. So, you know, once that kind of clears out, I think the price could really rapidly increase. And we could see Bitcoin well over $100,000. In fact, I think that's where Bitcoin ideally should be. I mean, it was up to 60 for a while, and then it came back to 20. And now I think that we're due to come back to 60 to $100,000 fairly quickly. I would say within the next 6 months. So if you're looking for that kind of return and you're willing to tolerate that kind of risk for something that we know that the largest, biggest conglomerates in the world are going to want to start doing, then you got a pretty good idea that Bitcoin's going to go up in price. And you know that they're going to do this. I put out an AI video last night about the fact that the Feds are going to start dealing with inflation by a digital currency. They're not going to continue they're not going to continue to manipulate the economy through interest rates, tightening interest rates or loosening interest rates by lowering interest rates or raising interest rates. That just is not effective anymore in today's world. The economy moves too quickly. It's a digital economy. The currency is analog. It's old world way of looking at things. The interest rate of raising and driving down interest rates and raising them up when things start to heat up, as they like to say at the Feds. Oh, it's heating up, we better raise interest rates. Or, things are slowing down, we might have a recession, we better lower interest rates. That's just an ineffective way of working in today's world. Things move at a quicker pace than that. If they had a digital currency, they could actually, with an open ledger, they could target areas that were slower by focusing on those areas with stimulus or doing something like that, and having more hands-on control. And they're going to have to do that because as artificial intelligence starts to take away from the jobs and the economy starts to really suffer because of job loss through artificial intelligence, the Fed's going to have a way to come in and help out stimulate certain parts of the economy that need stimulated, because all of a sudden we have autonomous drivers. All of a sudden we have, we have a lot of people that don't have a job because of artificial intelligence. Well, the Fed's going to have to come in and figure out a way to keep that all level. And the way to do that is to have a digital currency, so they can work with it digitally with an open ledger and get real-time feedback. So, when something happens, they've got it instant. When they raise and lower interest rates, that takes a long time to take effect. In fact, Chairman Powell always says that. He says, we have to do it, and then we have to see how the economy reacts to it, which is such a really ineffective and kind of outdated way of looking at things. We have to see how it plays out first. And not knowing how our actions, in fact, right now, everybody's trying to second guess to see if they're going to raise interest rates right now. And his thing was, well, we're just going to have to wait and see. Well, that's because they have an ineffective way of dealing with this inflation that we have. We got massive inflation right now, and the only thing they can do is slow down the economy by raising rates, making it more expensive to get your hands on money. So you won't go out and borrow money to make the prices of things go higher. But at the same time, they're spending millions and trillions of dollars and printing them up and trying to keep things going. So the last thing the Feds want is a stagnant or deflationary cycle. So they're going to continue to print money and make things more expensive, at the same time raising interest rates. So it just isn't working out very well, and they need a digital currency to figure this out. It's going to, a lot of people are afraid that's going to invade our privacy as far as what we do with our money, how we spend it. It's going to be tracked, it's going to be open ledger, all this stuff. But I'm sure there'll be some controls on how this is done. But that's the only way it can work out. They got to get out of this massive debt they got. They're going to have some way of managing this economy. They've got so much new technology coming aboard, it's just going to be impossible to do it the way they've been doing it. So anyway, I appreciate you watching. Thank you.